Welcome back to Investing Talk Podcast.
Today we are looking at Micron technology, ticker symbol MU, and frankly, calling this company just a chip stock feels like you're missing the point.
How so?
It's like calling a Ferrari just a transportation device. We need to frame this correctly. Micron has sort of become the backbone of this whole AI supercycle.
As usual, before we start, subscribe, like, and comment to this video to support the show. It really helps us out with the algorithm and, keeps these deep dives coming.
Okay, so let's get right into it. The elephant in the room.
You mean the rocket ship in the room?
Yeah.
Because I pulled up the chart this morning and I nearly choked on my coffee.
Yeah, that sounds about right.
We're looking at a stock that has rallied 323% in 1 year. It's sitting at $417.88.
It is a staggering number.
It's more than staggering. It's terrifying if you're on the sidelines. I mean, usually when I see a chart go vertical like that, my first instinct is to think the train has already left the station.
That you've missed it.
Exactly. The party's over, and if I buy now, I'm just providing the exit for the smart money. So that's my big question today.
Right.
Is the easy money gone, or is this just getting started?
And that is the perfect question. My angle is that this isn't just hype. This isn't some meme stock. We're talking about a structural shift, really, the AI bottleneck.
The AI bottleneck?
Yeah, everyone's focused on the brains, the NVIDIA GPUs, but those brains are useless without high bandwidth memory, HBM. That's the bottleneck. And Micron is a key player holding the keys.
Okay, so the argument is this rally is justified by the plumbing of the AI industry. Let's prove it. Let's put the chart away for a second and look at the hard numbers.
Absolutely. Let's dig into the fundamentals. We just got the results for Q1 fiscal 2026, which ended in November.
And the headline number was record revenue, right?
Yep.
$13.6 billion,
Yep.
up 57% year over year.
Exactly. Let's just pause on that. 57% growth for a company this size is, well, it's incredibly rare. This is hypergrowth.
But revenue is one thing. I went straight for the earnings. Non-GAAP EPS came in at $4.78, a 167% jump. But here's where my skepticism kicks in. I'm looking at the margins.
And what'd you see?
They expanded gross margins by 11 points to 56%. That's a huge leap. But how? I mean, memory is usually a race to the bottom on price. How are they commanding 56% margins?
It's pricing power. Simple as that. This isn't your standard memory stick for a gaming PC. There is a massive shortage of HBM, and Micron gets to dictate the terms. They're selling a scarce, premium resource.
Okay, that makes sense. But the market's forward-looking. Q1 is in the past. What about guidance? What's coming next?
This is where it gets really wild. Analysts are forecasting fiscal 2026 EPS, so for the full year, to hit between $32 and $33 a share.
Hold on, let me do the math. They just did under $5 in Q1. Getting to 33 for the year implies a massive acceleration. That's over 300% growth.
It is aggressive, but it's backed by the order book. That HBM revenue is expected to surge 164% in 2026. And for Q2, they're guiding for margins to hit 67%.
67. Okay, now you really have my attention. That is software territory. Unheard of for hardware.
It shows you how desperate the data centers are. They literally cannot build their AI clusters without this stuff.
But scaling this fast costs a fortune. What about CapEx? Are they burning cash to do this?
They are spending heavily, yes. CapEx is sitting at $4.5 billion.
$4.5 billion. That's a huge number going out the door.
It is, but it's an investment in future dominance. And here's the best part. They generated $3.9 billion in adjusted free cash flow in Q1. So they're pretty much self-funding this whole expansion.
Yeah, so they're not taking on a ton of debt.
Exactly. They have to spend that money to build capacity. Otherwise, they lose their spot.
Speaking of their spot, let's talk about the competitive moat. Why Micron? Why can't I just buy from SK Hynix or Samsung?
Because HBM isn't a commodity, it's incredibly complex. Standard memory is like a single-story building. HBM is a skyscraper. You're stacking chips vertically, connecting them with thousands of microscopic holes.
So it's 3D construction at a nanoscale.
Precisely. And right now, Micron is number 2 globally, right between SK Hynix and a trailing Samsung. And they have an edge with their IP in HBM3E and HBM4. But the real moat is the high switching costs.
Unpack that for me. If I'm Amazon and Samsung offers me a cheaper chip, why can't I just switch?
Because it's not like swapping a battery. These AI systems are incredibly sensitive. If you switch suppliers, you have to re-qualify the entire stack.
And what does that mean, re-qualify?
It means months of engineering time. recalibrating everything, thermals, power, software drivers. No one is going to risk crashing a billion-dollar AI cluster to save a few bucks on a memory chip.
Yeah.
Once you design around Micron, you're pretty much locked in.
So they have a captured audience for at least the next couple of years.
That's the moat. They're protecting about a 25% market share through 2027 just because of that.
Okay, that's a much stickier business than I realized. All right, that covers the fundamentals. The business is a cash machine.
Let's pivot to the charts and look at the technicals. Because like I said, the chart is vertical.
It is 417.88, up 44% just this year, and we're only in February.
And the 1 year is up 323%. Just in the last week, another 10% pop. What's driving this momentum?
Well, the stock is in what we call blue sky territory. There's no historical resistance because it's never been this high.
Right, so there are no bag holders from 5 years ago looking to sell and break even.
Exactly. Everyone holding is in profit.
Yeah.
The recent leg up seems tied to news about HBM4 production and maybe some sympathy from Kioxia's earnings.
But is this just retail hype? The Reddit crowd chasing another AI name?
I don't think so. When you look at the volume, there's clear institutional accumulation. You just don't get a move like this on a large cap stock without the big funds piling in.
I see the headlines, soaring, rocketing higher. As a contrarian, that usually makes me nervous. I know it does. But look at the relative strength. The broader market has had some rough days, but Micron has just powered through. That tells you the big money sees this as a safe haven for growth right now.
Moving on to what the street is saying. Let's talk sentiment. Usually with a run like this, analysts start getting nervous, downgrades start coming in.
It's been the complete opposite. It's like a race to see who can set the highest price target. Morgan Stanley just raised their target to $450 from $350.
$100 jump. Wow.
And they reiterated their overweight rating. William Blair initiated with an outperform, specifically calling for that EPS to quadruple. Goldman is saying the same thing.
The narrative has completely shifted. I saw a headline yesterday, is Micron the next NVIDIA?
That's the headline of the week, isn't it?
It's a dangerous headline. I mean, NVIDIA is a once-in-a-generation company. Comparing a memory maker to them feels ambitious, maybe delusional.
It's definitely ambitious. But the mood is strongly bullish. And look at the insiders. The CFO made comments about the HBM4 ramps that lined up perfectly with the stock surge. That's a signal of confidence.
And there's a lot of speculative buzz. I'm hearing it called a millionaire maker stock.
Yeah.
Chatter that if they beat Q2 earnings, we'll see another round of target hikes.
The bar is being set very, very high.
And that's what worries me. Let's be the adults here. Now let's look at the risks. Because when everyone is this bullish, that's usually when things go wrong.
Fair enough. What's your biggest concern?
The cycle. The cycle of doom. Memory is historically the most cyclical part of tech. We've seen this movie before. Demand spikes, everyone builds factories, supply floods the market, and prices crash. Why is this time different?
That is the classic bear case, and historically you'd be right. But the multi-year AI visibility really dampens that risk for now. We're not selling chips for PCs and smartphones anymore. This is a structural build-out of infrastructure.
So the demand isn't from consumers, it's from corporations that have no choice but to spend.
Exactly. The hyperscalers, Amazon, Microsoft, Google, are in an arms race. They are spending over $600 billion on CapEx in 2026. They can't stop. They're forced to buy these chips.
Okay, but what about competition? You said Samsung is looming? They're a giant, and they hate being number 3. What happens if they get their act together and get qualified by NVIDIA? They could crush Micron's margins.
That's a valid risk, and it's the one to watch. But let's look at the valuation as a defense against that.
The PE ratio.
Right. If you use that $33 EPS forecast for 2026, the stock is trading at around 9.7 times forward earnings.
Wait, less than 10 times earnings?
Yep.
Okay, that actually stops me in my tracks. NVIDIA trades at what, 30, 40 times?
Sometimes 50.
So the market is giving Micron a massive discount compared to every other AI play.
It is. A PE under 10 implies the market thinks earnings are about to collapse. But every piece of data says they're about to triple. There's a dislocation there.
So you're saying the cyclical risk is already priced in. The market is treating it like an old-school memory company, but the fundamentals look like a hyper-growth AI company.
Precisely. And that $600 billion in CapEx spend from the hyperscalers, it creates a floor for demand that we've just never seen in previous memory cycles.
It's a safety net.
It is.
All right, we've unpacked a lot. The massive growth, the technical breakout, the bullish sentiment, and the risks. It's time to make a call. Let's move to the final score.
For me, the bullish score is a 9 out of 10.
A 9. That is incredibly high for a stock that's already up over 300%.
I don't give that score lightly. But the thesis is just so clear. Micron is riding the AI memory supercycle. HBM revenue's exploding, margins are pushing towards 70%, and that valuation, a 9.7 forward PE.
It's the valuation that gets me. At 50 times earnings, I'd say this is a bubble, but at less than 10.
It creates a margin of safety. I see this as a multi-year hold into that 2027 EPS peak. The bottleneck is real, and Micron is a key part of the solution.
Well, even for me, it is very hard to argue with a PE of 10 in this market. I'm still watching that Samsung risk like a hawk, but for now,
Yeah.
the momentum is undeniable.
That's the look at Micron technology.
Don't forget to subscribe, like, and comment to this video to support the show. We'll see you in the next one.